Hey everyone, good morning, good afternoon, good evening. My name is Zhong. I'm the head of research here at CoinGecko, and I'll be your host for today. Welcome to CoinGecko's 29th virtual meetup. And actually, today, if this is your first time joining us, is a bit of a special one. We do this every quarter. We are gonna have two agenda items. So, firstly, what's gonna happen is we're gonna have Sean, one of our research analysts. He's gonna run you through the our 2023 quarter three crypto industry report that you can already see on the screen. This is just going to be a quick summary. It's about the full report is about 50 pages that we just published, 2 days ago, and you can already find it on our website. But I think he's just going to run you through what are the key points in the report itself. After that, we'll go into the main part of our meetup where we're going to have a panel discussion with the title of Optimistic about Optimism. And I'll be hosting that and I'll tell you a bit more of that once we get to that point. So without further ado, I'm just going to turn this around to Sean and he'll take you through the summary report. Over to you, Sean.
Thanks for the quick intro, Zhong. GM everyone. Hope everyone's portfolio has been doing well the past few days. I'm Sean, part of the research team here at CoinGecko. As Zhong previously mentioned, I'll be walking you through some highlights from our recently published Q3 report. So without further ado, let's dive into it. Well, first up, we have the overall crypto market review. So in Q3, the overall crypto market saw a decline of almost 10%, or in absolute terms, 119.1 billion, around there. However, recent surges has actually seen the market pump quite a fair bit. So it went from 1.12 trillion at the end of September, and it's currently sitting at about 1.3 trillion. However, we still see quite subdued trading volumes, and it actually dropped 11.5% between Q2 and Q3. As for crypto rankings in the top 30, Solana has actually been doing pretty well over the past quarter. It has climbed from 10th place to 7, while through USD, the stablecoin, the continuous minting of it by Binance as well as by Justin Sun has brought it from 23rd to 19th position. As for the losers of the past quarter, they include Avalanche, which fell 7 places from 15th to 22nd, and the stablecoin BUSD has continued to fall in rankings as well from 18 to 27. This is because Binance announced that it's phasing out its stablecoin and support for it will end in February 2024. So if you still have any BUSD, don't forget to swap it to other stablecoins in the market. Yeah. As for Bitcoin, the third quarter was actually rather red for Bitcoin. It actually fell 11.5%, dropping from 30.4K to about 26.9K. But as you all know, the pumping market over the past few days, due to the BlackRock iBitcoin ETF appearing on the Depository Trust and Clearing Corporation website, pumped Bitcoin quite a fair bit. So it actually has hit a new yearly high of 35K, but it has tapered its gains slightly, and it's about 34.5K now. Yeah. And if you zoom out further on the Bitcoin chart, you actually can see that it has posted a significant gain of 108% year to date. As for Ethereum, Ethereum has also fallen quite a fair bit. It fell 13.6% in the third quarter and closed September at about 1.6K. But similar to Bitcoin, it also has had a pretty great start to the fourth quarter of the year and is now up 49% year to date. However, Bitcoin has outperformed Ethereum by a large margin. And despite staked ETH increasing overall throughout the year, this did not stop a sell-off of ETH. But if we move on to the development side of things, Ethereum has been quite quiet, other than a few proposals being pushed through by the Ethereum Foundation. But layer 2 projects have been really busy the past quarter, and we've seen many launching among the likes of Base Network, Mental, Linear, and Shiba Inu, Shibarium, all having launched within the same quarter. Now, moving on to layer 2 staking. E-staking has continued to grow in the third quarter of the year, but it has been growing at a slower pace of 14.5% as compared to the previous quarter in Q2, where it grew about 30%, just after the unlocking of stake thief. Yeah. So it has now hit about 27.3 million, which is a gain of 3.5 million, and Lido has still remained the dominant provider of stake ETH. It holds about 32.2% of all stake ETH across the network now. As for newcomers in the top stakers, we actually saw Figment rise through the ranks quite rapidly. It's actually it mainly provides institutional staking services, and it has become the third largest now with about 1.2 million stake ETH, having added 440k stake ETH, or 50% gain in the third quarter alone. Yeah, so quite significant there. And now we are moving on to new blockchains in 2023. As I mentioned a couple of slides back, it was a really busy quarter for layer 2s. But aside from layer 2s itself, the entire year has actually been a whole year of building and shipping new products. I mean, there's a saying that bear markets are usually for building, and that can't be true enough for new blockchains in the year. Yeah. So in our research report, we actually took a look at 7 blockchains that were released this year, and we found that Sui was the most dominant actually, having accounted for about 91% of all transactions among the 7 that we researched. But do note that this was over a course of 5 months only. So of the 885 million transactions, 802 million were on Sui, with the majority having taken place in July alone. So the reason for such a high number of transactions was actually the launch of a puzzle game called Sui 8192. So I think it's similar to the popular mobile game called 2048. And every move in this game actually counted as a transaction, hence the extremely high number of transactions recorded on the blockchain. Yeah. So while many blockchains were actually launched throughout the year, not many managed to gain traction. With Base backed by Coinbase, and Sui being the only ones to actually cross 10 million transactions in September. Meanwhile, Polygon ZKVM actually didn't even manage to hit 1 million in that same month. Yeah. But not every blockchain is built the same. Yes. Now, moving on to some new trends in the third quarter that we noticed. I'm sure most of you here have actually heard of Friendtech, which is a SocialFi application. SocialFi has made quite a resurgence in recent months, especially due to Friendtech, which launched in August. So the basic idea behind Friendtech is that it actually allows users to purchase keys of other users. And if you purchase these keys, you actually get to enter a private chat room with the owner of this account. Yeah. So it has primarily gained traction amongst people Twitter influencers, or CT, who have used it as a platform to engage their followers on a more personable level. Yeah. And speculation in this platform is actually rather rife, with these keys being traded and also due to the confirmation of an upcoming airdrop. So we've seen users and traders accumulating these points by purchasing and holding keys, which are believed to be connected to the airdrop. And this has also given rise to the tree meme, whereby it was popularized by Olympus DAO, Ohm, and its other forks back in 2021. Yeah. And while over the past few weeks, volume has sort of tapered off a bit and activity due to more concentration being put on Bitcoin and ETH, which have been pumping quite a lot recently. And next up, we'll be diving into DeFi and its market share. So Q3 wasn't a really good quarter for DeFi, but one thing to note is that while Bitcoin dropped about 13%, DeFi total value locked actually only dropped about 7.6%. In absolute terms, it dropped about 5 billion from 64 billion in Q2 to 59 billion. So yeah, it did hold up comparably well to other sectors in the crypto industry, largely thanks to oracles and real-world assets, which we will be exploring shortly in a later slide. As for networks, Ethereum has managed to retain the majority of its TVL, and it has maintained its dominance as well. Its dominance is currently at 70% of all total value locked. Yeah. And Solana has continued its good form in token price performance. It has also increased its TVL on the back of partnerships with Shopify and Visa. And it managed to increase its TVL by 18.7%. So while other networks in DeFi saw their TVL drop, Solana actually saw an increase. And the newcomer Base has also been really hot in DeFi. Not only has Friendtech launched on it, but we've seen many other DeFi applications launch on it as well. And it quickly brought in about 370 million in TVL within the past 2 months, and it's already the 9th largest network, though it is still behind other layer 2 networks such as Optimism and Arbitrum. But we do see TVL on Base network increasing quite rapidly. And as for DeFi ecosystem, as mentioned previously, we did see oracles and RWA or real world assets holding up quite well. The majority of sectors in DeFi suffered losses, but the entire DeFi sector only dropped 2.9%, even though sectors such as decentralized exchanges and liquid staking dropped by 14.4% and 18.9% respectively. But going on to the winners, oracles actually rose 33.9% from 4 billion to 4.5 billion. This was mainly on the back of Telor Tributes, one of the oracles, which had a price surge, quite a significant price surge over the past quarter. And it's continuing to surge actually the past few days, along with other oracles such as Chainlink. Yeah. Meanwhile, real world assets also contributed a fair bit, and it climbed 7.1% from 523 million to about 560 million. And now we'll be exploring real world assets a bit more deeply. So the real world assets, we've actually seen its popularity surge quite a fair bit the past year. It has seen has seen quite a fair bit of interest over the past few years, but nothing we've ever seen before like this year. More financial products and luxury items have actually been making their way on chain through institutions which tokenize all of these. In particular, we've seen a big bump in tokenized US treasuries and securities being offered by DApps such as Open Eden and Ondo Finance. So rising rates of treasuries have actually made users to chase these yields, which is why we've seen this asset class increase quite a fair bit, and it's hitting about 660 million in treasury bills alone. Private credit has also seen quite a fair bit of a rise. Institutions or businesses that are unable to obtain secured loans uh, tend to go for these unsecured loans from these providers. But being unsecured, sometimes they can be fairly risky, and there's been a fair share of defaults already. And now we're going to take a brief look at NFT trading. So NFT trading has had quite a shambolic third quarter. It's one of the sectors which has dropped the most in crypto over the past quarter. It saw about a 49.7% drop from 2.46 billion in the second quarter to a mere 1.24 billion in the third quarter. However, despite the slump, Blur has continued to dominate the sector, and it now consists of about 56.1% of trading volume, and it has overtaken OpenSea throughout the majority of 2023 so far. Mainly due to its season 2 airdrop, which is scheduled next month in November. So airdrop farmers have been trying to capitalize on this in order to maximize their allocation. As for Solana, Magic Eden has been overtaken by TensorSwap, which launched late last year, and it now has 57.1% of Solana NFT trading volume. As for Bitcoin ordinals, OKX, the crypto exchange, which also has a NFT trading platform, it has emerged as the dominant player in this sector with about 50.1% of trading volume. This is rather impressive considering it's a tenfold increase from the second quarter, and it has now edged out Magic Eden and Unisat. As for centralized trading volume, this too has fallen quite a fair bit as other sectors have in Q3. So the top 10 centralized crypto exchanges saw about 1.12 trillion in spot trading volume for the third quarter. And this is about a 20.1% decrease from the previous quarter. And it has been a rather turbulent quarter for crypto exchanges, especially for Binance, which has come under increasing pressure from regulators, and it has already exited multiple markets. It recently sold its share in Russia to a different crypto to one of the banks in Russia, and many executives have been leaving the exchange as well. With I think a couple just leaving yesterday. Yeah, and this has clearly impacted its market share, which is now at a yearly low of 44% in September, down from its yearly high of 66% in February. The last time we saw such a low market share for Binance was back in June 2022, which whereby it dipped below 50%. Meanwhile, Justin Sun's own HTX, which recently rebranded from Huobi, regained its spot in the top 10. Not only did it regain its spot in the top 10, it actually now places third in the rankings, and it actually ended September with 8% market share. It had about 35.3 billion in trading volume in the third quarter, which is a rather significant gain of 86.9%. It was actually one of only 3 exchanges in the top 10 to post any gains, with Upbit and Bybit being the only other gainers, whereby they had about 4.6% and 6.9% respectively. Well, Huobi had to replace an exchange in the top 10, and unfortunately, the exchange was KuCoin, which has now been edged out of the top 10. KuCoin has actually been a mainstay in the top 10 for ever since its inception in, if I'm not mistaken, the 2017. Yeah, it has been edged out with failing volumes, which most exchanges have been suffering from lately. And finally, we'll be moving on to decentralized exchanges and its trading volumes. So decentralized exchanges actually saw a bigger drop compared to centralized exchanges in percentage terms at least. So it had about 105 billion in 2023, the third quarter, which is a 31.2% drop from the second quarter. Uniswap continued to dominate the rankings, and it ended September with a 65% market share. As for gainers, we saw Thorchain, sorry, excuse me. Uh, I'm about 113% in trading spot trading volume, or 1.27 billion in absolute terms. But this surge in volume can be partially attributed to illicit transfers through the network, unfortunately. And you've seen prominent hackers or exploiters, such as the FTX hacker and also the North Korean Lazarus group, uh, washing funds through the network, especially in late September. But I believe that's been fixed now. Core Swap had to go under maintenance a couple of weeks back to fix this issue. But nonetheless, it ended September with 3% market share. And Sushi, which has been around in the decentralized exchange space since its launch in 2020, has now fallen out of the top 10. Instead, Orca, the Solana-based DEX aggregator, has taken its spot with a 1% market share at the end of September. So that's it for the report summary. And just to recap some points from the report, the main highlights is Solana has seen a rather rapid resurgence in the over the quarter, despite its hard end 2022. It had a really hard and late 2022 after the fall of FTX, but we've seen it climb rather impressively, with tokens and protocols benefiting from this rise. And real world assets has had a rather stellar quarter as well, and we've seen obviously the TVL increasing for all these real world asset protocols. But of course, aside from gainers, there have also been many losers throughout the quarter, and that came in the form of crypto exchanges, which have suffered due to a slump in trading volume and liquidity. But yeah, that's about it for this year. This quarter's report. We'll be publishing another one in the fourth quarter. Right, next year in Q1, it'll be a yearly report which covers 2023. Okay. Thank you. Thanks for tuning in. Now I'll be passing it over back to Zhong. We'll be taking over this meetup where we'll be talking about optimism, and a few chats from some optimism teams. Yeah.
Hey everyone, welcome back to CoinGecko's 29th virtual meetup. Let me first also say welcome to Matt, Alex, and Atakan for joining us today. The theme of our panel discussion is optimistic about optimism. And obviously, that means we're going to dive into the optimism ecosystem and, some of the other projects as well that are sort of building on optimism and the OP stack um, around it as well. So, joining me today, I'm going to introduce them formally. We have Alex Cutler, who's a contributor at Velodrome and Aerodrome. Um, we have Matt Losquado. He's the communications lead at Synthetics, as well as Atakan Yelkovan. He's the CEO and team lead at Som Finance. So I'm gonna go straight into it. And if you have any questions for our speakers and stuff like that, please do put them in the Q&A box. So I think just to kick off, I think since this is about optimism, we have two projects. I mean, Velodrome and Som Finance. You guys started here on Optimism, whereas Synthetics, obviously, you guys launched much earlier, but pretty much deployed Optimism first when it came to the L2s. I think more recently we have also seen other projects that are sort of migrating or deploying onto Optimism as well. So I think the first question to all of you guys is that why optimism, right? So what made you decide to be on Optimism? There's so many different L2s out there. How did you arrive at this choice, and what was it from Optimism that appealed to you the most? So maybe we can start with Matt, and then we'll go around the table. Yeah.
Yeah, definitely. So I think the conversation of synthetics going over to Optimism is one of the most interesting ones in the DeFi landscape because synthetics has been around for a very long time, right? Synthetics has been around since 2018 as Haven started off as a stablecoin protocol and has transitioned as time has went on to try to meet users' needs. So when DeFi summer came around, Synthetics was a spot exchange protocol, allowing you to go from one synthetic asset to another. The problem is that it was an extremely gas intensive protocol for both the liquidity providers and for the traders. So when gas spiked, most users were priced out of using synthetics. And we looked for a scaling solution. And the scaling solution of the time that was initially building and initially drawing out their vision was Optimism. And Synthetics had decided very early on to go the route of Optimism and start building out our ecosystem of protocols over there. The community was extremely excited to do that. We share, a long and storied history with the Optimism team, and an ethos of decentralization and decentralized governance. And we jumped into that full speed. And the biggest thing for Synthetics is that when it comes to going to Optimism and being there, all of the amazing products that are currently built on Synthetics couldn't be built on Ethereum mainnet. You can't have high performance perps with high performance, low latency oracles on Ethereum mainnet. I mean, it's just not possible, right? You can't have options protocols. You can't have perps protocols. You can't have structured vaults, like high performance ones, right? So the entire ecosystem that Synthetics has built is only possible on Optimism. And Optimism has really made Synthetics extremely competitive and has laid the groundwork for it to grow, up to now. Like products like Synthetics Perps have done, 30 billion plus in volume and 20 million plus in fees just this week, looking at, about 1.5-ish million in fees burned. So, it has been a fantastic place for Synthetics. And I think that people really need to remember that without this high performance L2 scaling, all these products that Synthetics currently has wouldn't be possible. So it's really a no-brainer, and it has allowed Synthetics to onboard so many new users, so many stakers, so many LPs, and traders and protocols and everything else. So it was a no-brainer from our side to go to a scaling solution like Optimism.
Atakan?
So our journey on Optimism started not because of Optimism, but Velodrome, similar to a lot of other projects. And to be honest, we didn't know much about Optimism, other than it being a good L2 at the time. I was very active on Phantom ecosystem at the time, and when Andre Cronje dropped solidly, me and some friends started to brainstorm on how to use it efficiently. And we thought it's a great way for projects to have earlier liquidity and first stage revenue, which like a lot of projects like and die in the first month just because of this. And we came up with an idea, but when Andre tweeted that he terminated the services he provides, we started to look for the best Solidly fork, which was Zhong, which still is probably, and it was also an upgraded version of Solidly. For example, old degenerates like myself will remember Batman Spider-Man pull on Solidly, which enraged Andre, but Zhong came with whitelisting, which prevented such cases. So because Zhong was on Optimism, we chose Optimism, like a lot of projects, to be honest. And after that, we looked at like what's lacking in the ecosystem, and Optimism had a great central liquidity hub, which is Aerodrome, a lot of great yield optimizers like Beefy, Yearn, etc. The best derivatives protocol of whole DeFi, which is synthetics, but there was no native lending protocol. And like at the time, I was giving a lot of yield with their huge OP grant, but when grant ended, the yields just stopped and money was going out of Optimism. And I believe we filled that gap in a very short time and gave people a reason to bridge and try out Optimism. Also, we provided such help in our Discord, Telegram that like everyone who tries Optimism was having an easy and good times. For like I think you asked like, did you consider other networks or? Yeah. Like for second question, we expanded to Base as Zhong because of OP stack friendship there. Forked our own protocol on Kava EVM and waiting for Chainlink to expand into Polygon ZK EVM.
Nice. And Alex from Velodrome. So, well, Atakan just said lots of projects migrated to Optimism because of you guys. So, how did you guys make this leap then to Optimism?
Yeah, and good morning all. So I think the way to think about our migration is Atakan gave a great sort of summary of some of our shared history, right? So we were a part of a DAO on the Phantom chain that was dedicated to supporting Solidly. And so when Solidly failed, we had the opportunity to basically say, hey, we think that the failure of Solidly is not a failure of the underlying primitive, right? That there's something really powerful here. That if we make some adjustments to the sort of core tokenomics, if we make some adjustments and fix some bugs in the code, and we find the right ecosystem, that this could be very successful. And so when we were looking across the landscape, I think a few things guided our decision making. One is at that point, and this was not a popular thesis. It's obvious in retrospect, but it was not popular at the time. Was that the Alt L1 sort of era was coming to an end, and the whole thesis behind the Alt L1 movement was false. That we did not need 100 different alt layer ones in crypto, right? That Ethereum had won. That the issues with Ethereum would primarily be solved by layer twos, and that even if we were going to be entering a bear market moment, which we were just starting to see, at that point, that the capital, that the users, that the builders that remained in the bear market would need a place to sort of congregate and build, because unless this thing was all truly going to zero, there were always going to be folks who persisted. And as they sort of migrated out of those alt layer ones, they were going to need a place to go. So we were looking, at Aerodrome, we were looking at Optimism. And I think for us, it really came down to when you talked to the Optimism team and when you talked to people broadly who knew the tech, everyone agreed that while Optimism, they might be a bit quieter, they might not be as much the darling of crypto Twitter, the underlying tech is some of the best tech to build a layer 2 rollup, and where they were going with Bedrock was going to unlock a ton of different possibilities. And that their vision of creating this public goods funding engine, that there was just truly nothing else out there like this, right? Part of the Altel 1 thesis that failed, right, was the idea that you could take all this money and incentives, you could pay people to come, you'd build all this activity, but the moment those incentives run out, right, everyone just moves on to the next big pile of money, right? And they just keep rolling it around crypto. With the public goods vision, you had something really compelling in the sense that, sequencer revenue was basically going to go to support sort of like grants to projects in perpetuity. And by making them retroactive versus sort of like proactive, you're going to be able to reward the builders who had the greatest impact. And so the combination of those two things said to us that, Optimism was really a cut above other options that were out there. And then subsequently, of course, we've got the vision of the Superchain, which we think is the most compelling vision for how Optimism and Ethereum continues to scale. So those three things combined said Optimism's the place to be. So we went to Optimism, and then as Atakin said, we got after basically growing that network, because outside of synthetics and the amazing ecosystem that they had built, there wasn't much on Optimism at that point. It needed that native liquidity layer. And as Matt and the synthetics team said, we applied the Velo grind set, and we onboarded another 60 protocols to the ecosystem.
Yeah, so I think wanted to follow on that thread a bit more, right? So obviously, Velodrome came from Solidly, and when you guys had to start out on Optimism, was it actually difficult porting over the codes and things like that, or was it pretty simple from a technical perspective?
Good question. So I mean, anytime, well, let's put it this way. We really believe in trying to operate according to like true DeFi principles. So that meant when we were taking, Andre's original code and making our adjustments, fixing bugs, and all that sort of stuff, we wanted to be sure to deploy it in an immutable way, right? This is something that I think a lot of folks in the space don't really always notice, right? They don't always notice that they're using a protocol with a bunch of upgradable contracts, with proxy contracts, with all of this sort of stuff. So it was difficult in the sense that we needed to very quickly, make all these fixes, make all of these adjustments, run it through, an audit, right, to make sure that it was going to be as good as it could be, and then deploy it in a way that was going to be immutable, which meant as soon as it was out the door, it was going to be what it was going to be. And it was challenging, and because of our accelerated schedule, right, we didn't get everything right in V1, but that meant that once V1 was out there and kind of doing the job that it needed to do, we actually just started immediately rebuilding the entire code base from start. V1 in some ways was our minimum viable improvement on top of Solidly, and is one of the most forked code sets in all of DeFi now, right? Because once people saw Velodrome's success, they took that code base and they deployed Velodrome forks, to almost every chain. Sometimes maybe 5 versions of it on every chain. But we set out to basically rebuild the whole thing from scratch, to rebuild the whole front end from scratch. And a few months ago, we launched our V2 version. And that's, of course, the version that Aerodrome is built on as well. And we now think it's one of the most advanced frameworks for DEXs out there. And it allows us to add things like concentrated liquidity, which will be coming in the next month or two.
Yeah, so
yes, it's definitely a challenge. I mean, it took us almost a year to launch V2, right? That's how much time we put into the new contracts.
Yeah, and I wanted to ask about Aerodrome as well, right? So you guys launched Aerodrome on Base, and like you said, Velodrome has a strong brand name, coming from Optimism. So I was interested, like when you guys launch, you use a slightly different name, right, on Base, and I was wondering, like, what's the thinking behind that? Wasn't it, easier to call it Velodrome, and is there going to be any sort of interoperability or like bridging between Aerodrome and Velodrome? Yeah.
Yeah, I think the best way to think about it is one of the things we learned, right, through building and growing Velodrome is that ecosystems need native liquidity layers, and that means liquidity layers that are focused entirely, and their incentives are entirely aligned with growing and scaling a given ecosystem. So when you look at the DEX landscape on Optimism, right, you can see that Velodrome has like 2 times the TVL of every other DEX combined. And we're talking about the heavyweights here, right? We're talking about Uniswap, we're talking about Curve, we're talking about Kyber, we're talking about Balancer, right? So when we say we've got 2 times the TVL of all these other DEXs combined, that is like a huge accomplishment. And when you look at actually what TVL is on those other DEXs, it's really just like a handful of tokens. So most of the other TVL on Optimism's on like 5 pairs, right? It's wrapped ETH USDC, it's OP wrapped ETH, it's these sort of core ecosystem pairs. So we have about, I think, like 5 times the total number of like tokens with significant liquidity. So truly, we are like that ecosystem hub. And we think that that is related to the fact that we are not multi-chain, right? All of our emissions go into the Optimism ecosystem. They serve basically as a secondary economic engine. All of the fees and revenue that we create, none of it goes to the team. Like there's no team fee on top of this sort of stuff. It's all recycled back into the ecosystem. All goes to the Evelo holders and lockers. And the way in which this has created such a growth multiplier for the ecosystem taught us that, deploying a multi-chain velodrome to Base would have meant that we would become kind of more like Curve on Base, and Curve on Optimism is like a marginal player. We didn't think Base needed like another marginal cross-chain DEX whose incentives were split across multiple chains. We thought it needed its own velodrome, right? It needed its own native liquidity layer focused on growing that ecosystem. And so that's why we decided to launch Aerodrome. And we did this, not on our own. We did this in close consultation with the Base team and with the Optimism team. And they both agreed, that in the early days of Base, it needed its own economic engine. It needed its own liquidity layer, not just another cross-chain DEX, because I think cross-chain DEXs, the jury is still out, especially if they're mission-based, if they actually scale well to multiple networks. The forward-looking vision, though, for these is that Velodrome is going to extend to service the liquidity needs of the Superchain. So rather Velodrome's going Superchain, and I think you could think about it like osmosis on the Cosmos ecosystem, right? Where osmosis is the liquidity hub of all of those interconnected chains, and you can access that liquidity across everything. Aerodrome is going to be very, very focused on integrating closely into some unique services that Base is going to be able to operate as kind of the onboarding engine and as the secondary hub of Base and of the broader Superchain. And so basically in the short term, there'll be 2 sort of sovereign DEXs. Velodrome is going to start to scale wide, right, across all of these super chains, and Aerodrome is going to scale deeply into integrating into Coinbase and Base services. And so there will be some degree of connection and interoperability there, but they kind of have 2 different jobs to do.
Yeah, I think that's a good answer, and I did want to turn this question across to Adakan and Matt as well. I mean, Adakan, you just talked about going to Base as well, and Matt, I know like Kane has written article around thinking about whether to migrate and things like that. So wanted to pose the same question to you guys. I mean, like Adakan, you migrate, so like why, and sort of like it's sort of like a not exactly the same brand. And then, Matt, the considerations around, whether synthetics will go beyond as well. So maybe Article first. Yeah.
Yeah, like Alexander said, like we expanded to base as Zone because like we thought that it would be good just because of like OP stack friendship there. And like for example, Kava EVM, we forked our protocol because like, for example, when people want to try out new chain, they generally need yields, if you know what I mean. Like, for example, let's say we bridged over to Kava EVM as Zone, and like the USDC APR is 5% on both. Like, will anyone just bridge from original Zone on Optimism to Kava for the same APR? No. Will they choose if there's a new native protocol with 20%? Probably yes. And generally, OG protocols like many, like synthetics, Aerodrome, or like Aves, maybe we are not, I think, OG right now, but maybe in 2 years we can become OG. Like Zonne has like a lot of incentives spent for just one chain, like growing user base. Like these yields are like marketing expenses in one chain to grow user base and grow revenue. And like the tokens are not endless, so it's very hard to give away new free tokens just to get a market share in a new chain, if that makes sense. So sometimes we can choose like Zone and Base to spend some more tokens to get a user base in a new ecosystem, but it's generally very hard to compete with new and native projects that people like to use, to be honest. Like a lot of people, I don't know if you agree with me, like if you all agree with me, but a lot of people in crypto are tribalists. Like it's lower compared to the past, but like for example, AVAX people don't like Phantom guys, like, or Arbitrum people don't like Optimism guys. Like there's literally zero protocol that launch on BSC at the time from Ethereum or things like that. Like, and native protocols does fill that gap of like commitment from native users, and also acts like leveraged long or short positions on the native tokens. For example, if you want to long OP like 5x, 10x, and don't know how to use synthetics or perps, like things like that, you just buy Zone or Velotron. Like it's just easy, and the tokens are like filling that gap very greatly, in my opinion. And those are the reasons that like sometimes OG protocols don't like to expand into other chains. For example, just last example, like, have you heard anyone talking about Aave on base? Like literally no one. Like, but Aave is on base. Like, but people know Compound because like they're spending incentives, Moonwell because the same, and ZoneNet because of the same thing. So it's hard to compete with yields, incentives with reputation, and generally yields win.
Matt, from synthetics perspective.
Yeah, so the synthetics perspective here, which you alluded to with, how, Kane has been writing about this and various other community members have been writing on this topic as well. It seems like there's governance consensus around base being the next place for synthetics. And I am 100% supportive of that. And I think there's so much more to talk about there. Like, number one, the code base is exactly the same for the entire Optimism stack. That simplifies the experience greatly for deploying, right? Like your developers don't have to stay up all night making sure that each little nook and cranny of the system works if they were to deploy elsewhere, right? So that's first off. Like the developer experience is fantastic as synthetics goes to, or moves to go to base. And the next thing is that synthetics is like on the cusp of releasing synthetics v3. And with synthetics v3, we really open the doors for developers and protocols to build derivatives and on-chain financial products on top of Synthetics infrastructure and Synthetics liquidity. And with that, we think that that'll revolutionize the on-chain derivative space. And the first experiment in seeing how that shakes out is going to be on Base. So how Kane has talked about this and how governance has talked about this and how governance has started to agree, it seems as if Synthetics will go to Base and use it as a experimentation testing ground. Because as of right now, the collateral type in the system, or the main collateral type in the system, is SNX. But when we go to Base, the collateral types will be ETH and will also most likely be USDC. And with that, you'll go a little bit of a different direction on scaling, or at least a little bit of a different direction on experimentation, where the protocol will try to onboard new collateral types to quickly scale up perpetual futures, options, the entire ecosystem, building over there. And then what you'll do is you'll take a fee share from those collateral types and the earnings from those markets and send it over to SNX stakers. So that seems to be what consensus is forming around. And there's just so much good that will come out of that, right? Like on the synthetic side, there's no like real derivative protocols that are already on Base that have seen any real adoption. And we've seen fantastic adoption over on Optimism, and we believe that it's a relatively similar user base. And Coinbase is doing so much in the education landscape and in onboarding new users, and in making the experience centralized exchange-esque, as they release wallet updates and things of that nature for users. And really, yet again, like this is another no-brainer for Synthetics. Experiment on Base, see how experimentation goes, scale up perps, scale up Synthetics v3, start getting that entire ecosystem of developers building on Synthetics v3, because Synthetics v3 isn't just perpetual futures, right? Like you can build option markets, you can build structured products, you can build lottery markets, you could see pool together, NFT perps, you could see anything. It's Synthetics v3 is this super generalized system where all it is you have liquidity providers that deposit collateral, they can generate SUSD, in a loan, and then that SUSD can be directed to derivative markets to provide liquidity, right? And that's the system in a generalized nutshell. And that's a very compelling vision for developers, right? Because as a developer on Base, if you're trying to scale up a derivatives protocol on Base right now, you're going to hit a wall of liquidity. There's really not much liquidity there, and you're going to struggle. And most protocols die, like as Adigan and as Alex have said, most protocols die at the hands of not having much liquidity. And that's what Synthetics v3 is aiming to solve. We're aiming to be this test bed and this new liquidity and infrastructure playground that people can build on top of. And Base will be the place that we onboard, or at least we expect to onboard, countless new developers and really start to build out that vision and emulate the same success that Synthetics Perps has seen on Optimism on Base. And then from there, there's conversations to take Synthetics v3 and build on things like app chains on Optimism. Like the Superchain is top of mind. We actually already have an ecosystem partner, Lyra, who's built option on top of Synthetics. They're developing their own app chain within the Superchain, because and there's also conversations for a Synthetics app chain, because for all of these things, like derivatives need high performance blockchains, and the biggest thing is for Lyra, you most likely don't want to share your block space with everyone else, so there's a real narrative there, and we're excited to be this liquidity layer and this infrastructure provider and this liquidity provider for all of these new protocols and existing ones, and we're excited to see how the Base side of things rolls out.
Yeah, I was going to ask about Synthetics v3 later, but you gave us quite a good download of what is expected and what is to come. But I think the other question I had for you as well is that Synthetics has been around for a long time, and you after you came to Optimism, pretty much you already mentioned Lyra, there's Quenta, there's Tails, there's a few complementary protocols, right, for perpetuals, options, and stuff like that. But these are mostly for degen traders, right? For people more advanced to know what they're doing, hopefully, when they're trading on one of these. I guess question is like, you guys were one of the first as well. What was the rationale between with like going with these with perps and things like that? Was it to target a specific niche or user base? Did you all consider maybe there should be a simpler thing that we go with first? Or yeah.
Yeah, so I'll actually take this question a bit of a different direction. I think the context that the listeners really need to kind of take in is that perpetual futures has been one of like the few areas in crypto and in DeFi that have seen like real product market fit for the protocols and for the traders, right? Because the perpetual futures experience has gotten much better as time has went on, right? Like that was a very interesting thing to do on chain at first. And there's been leaps and bounds of improvements, lower fees, low latency oracles, like these low latency off-chain oracles, and a lot of improvements around risk management that centralized exchanges have already been doing for a while now. When it comes to like the level of sophistication of the user, I think that varies, like extremely based on the types of users that are interacting with this product, right? Like, there's users that could be, you could say extremely sophisticated, and they could be, hedging hedging an LP position that they have on, Velodrome or on Uniswap V3, and they could be hedging it with, synthetics perps. Maybe you have sophisticated users that are doing, arbitrage trades and things of that nature. But maybe you just have a user that wants to speculate and doesn't want to use, Sam Bankman-Fried perpetual future and then get all the, have all their money be gone by the time that they go to close their trade. And that's the real narrative for on-chain derivatives, right? Like you don't have to trust me. You don't have to trust, Kane. You don't have to trust anyone at Synthetics, right? Like this is all just code on chain, fully open source, fully decentralized. And to us, that's the big thing that, DeFi really needs going forward. And we've seen, like as said before, like we've seen fantastic adoption in that. We've seen, tens of billions of dollars in fees and, tens of millions, generated or collected during this time as well. And with that, like I think that perps is a use case that expands to many users, and really to take it to that next step, right? Like let's just say, as Atticus said, some users aren't comfortable using perpetual futures. Like, you're dealing with funding rates, you're dealing with, price impact. There is a level of sophistication required, 100%. Now, we've seen protocols like Lyra, they build right on top of that synthetics perps infrastructure. And they say, okay, we're going to build options on top of this. Now, options also a complex financial product, but people may be more familiar with that. Or you're also seeing teams like TLX within the synthetics ecosystem building leverage tokens on top of synthetics perps, 2 times, 3 times leverage tokens on top of synthetics perps. Now that's a little bit of an easier one to digest because it abstracts away a lot of the complexities. Now, there's so much more that's being built in that landscape. And, as said before, Synthetics V3 opens the door to building any sort of derivative product as simple as a lottery market or no loss lottery market or raffle markets, to going as extensive as, maybe even things like automated arbitrage markets and structured products and all these real complexities, right? And, like with that, we're really just opening the door to as much experimentation in the derivative space as possible. And being the liquidity layer, we're allowing we're allowing protocols to build whatever sort of product on top of us, and they can target whatever type of user, whatever sophistication level of user, and they really have the control. We serve as this back end, and we're just enabling all of the liquidity and all of the infrastructure in this space. So yeah, like we're really excited to see what the next level of Synthetics V3 looks like, and what the next level of protocols built on Synthetics V3 look like.
Adigan, I want to come to you on Zona Finance. Part of what you mentioned earlier was, giving out incentives and attracting people to use the protocol. And, interestingly, I think Zona, when it comes to staking, they can, users can receive rewards in Zona or USDC, right? So this is something that's quite interesting. I think, we don't really see much other protocols do this, especially paying out in stable, because it's sort of like real money, right? So think about I guess the question is, how do you guys arrive at this sort of decision? Do you see people taking Zona versus USDC? Are they sort of different people looking for different things?
That's a great question. And like the short reason for having two rewards was like there was an article of Andre at the time stating the obvious problem of having tokenomics like XSushi, which just uses buybacks. Like quoting, fees are often used for buyback models. While this seems positive for the protocol, this means the fees themselves are correlated to the protocol token price. This volatility is a blessing if prices go up, but a curse when prices go down. So step one is to provide fees in an asset not correlated to the primary system asset. This means that by owning a percentage of supply, you are taking a bet on future fee growth of the protocol. So this was originally designed for Solidly, which also a core of well-drawn staking, but it's a great way of separating the token price and the fees. So instead of just buying back the token ourselves, we wanted to give people a choice of leveraging Zona or just enjoying the fees with USDC, similar to yields coming from bonds or stocks, etc. Like it's simply much more superior to having just buybacks. And let's not forget that in those protocols, when people wants to get the stables, they will have to sell back again. And when done in chunks, it also creates a like little panic from investor sides. Like you also like need to know a little bit of game theory, because like you either have to sell it before others or wait and stake, etc. Like I personally think like two choices more than enough for that. Like just on like use on NS on is more than enough for that. Also, let's not forget that we also distribute like Velo, OP, Aero to our stakers of any choice. Like we just released our cross-chain staking, by the way, and like by staking on Optimism, you can earn Aero tokens on Base, like simultaneously, and like it's great. So, and the reason why other protocols are not implementing is probably one of three reasons. Like first, maybe they didn't think about it before, and now they can't change it, or they don't know about it, or the most obvious one is legal obligations, because like distributing USDC is very like walking on a thin line, because generally companies that are US based are bound to this legal obligation that they want to stay away from being a security, and this distributing USDC is probably the closest one to being a security. And we living in Turkey that has very, very free laws on crypto that can do these types of things.
Okay. Yeah. So yeah, I think jurisdictionally USDC is so hard for US
Yeah.
for US companies, right? But outside of US, it's probably less of an issue depending on where you are. The other question really is another interesting thing, I think, is that recently there's been a proposal that's been passed to lower the collateral factor for stable coins, right? So this is interesting. I think people think of stable coins as like safe haven assets, and but at the same time we've seen stablecoin dip back, and it's something that has people are becoming more aware that there is a risk. How do you view this development? Do you think that other lending protocols will also view this with more risks. The other second question, I think, is more of other collateral types, right? So given that liquidity is fairly thin, prices can move quite significantly, quite quickly, can swing. Do you worry, and are there more risk management steps that you're going to take?
So yeah, that's again a really good question, and thank you for following the governance of Zhong. Yes, we recently passed it. Like it was also advised by audit, like the Earn experts auditing our code at the time, and we already used, for example, 85% C factors for stable zone in Zhong on base. As you said, like stablecoin DPEGs have become increasingly common, but like 95% of them are like obvious to a smart DeFi user. For example, like anyone who read the Luna documentation, like at the time should have known that USD is, like I don't want to say it, but it's a Ponzi. Or anyone who read USDR docs should have known that there's a bank run risk, because like there's a lot of assets are not on chain. Like the difference between a user choosing to invest them or like maybe play with them and a lending protocol choosing to make the collateral is that we only have one chance of failure. Like if we fail in an asset listing once, probably the Zhong brand just will be gone, and like probably most, if not all, of the suppliers' money will be gone. So we are always trying to be in the safe side when listing assets. Like though DPEGs wasn't the most important factor on making those changes, but having more liquidation room for liquidators. Like our liquidation incentive is around 8%, and lowering C factors to 85% instead of 90 gives liquidators 3 times more room, which also means suppliers' money will be 3 times more safe compared to others. And like we thought it was a great trade-off, just lowering 5% of the C factors and making it 3 times safer is a great trade-off. Like if it was just up to us, we would have done it like months ago. But in lending protocols, it's very easy to make C factors go up as it doesn't provide any risk to suppliers, but it's very difficult to make it go down, as you have to communicate with everyone who are supplying in order to prevent them from like surprise liquidations. And like whenever we see a potential danger and have a good solution without reducing the revenue or user base, we choose to implement it on those times. Like this was one of those cases. And I personally think other lending protocols should, of course, follow that sort of like creating and like managing lending protocol is fairly easier, for example, to protocol like Synthetics or Aerodrome. Like its code base is easy. The hard part is to choose assets, like decide on those assets, C factors, because like the risk is very hard. For example, Aerodrome can list USD or USDR, and as they got traded, Aerodrome earn fees, and there's no risk to Aerodrome other than just having lower TVL after the exploit or hack or something like that, bank run. But for example, for a lending protocol, if we have listed USDR, our protocol just like goes away. Like we cannot do that. Like we always have to be on the safe side. And for that part, we choose like safety factors of like generally safer than other lending protocols, because like we don't want any risks, any reputation damage, because like the most exploited protocols are lending protocols. Like for even that, we didn't have Velodrome LPs as collateral. Like we could have had that, like USDC, USDT LP on Velo. We could have use it as collateral, because like financially it's almost the same as having just USDT at Zone. But on contract base, like any protocol does that got exploited in the past. So we don't want to get in there without like having a lot of trials, and it's very hard. And we also talking to Hypernative. I don't know if you know them, but they are a great, like in short, great anti-exploit tool, and probably will integrate them into our protocol soon after the agreement and governance proposal coming in the future.
Nice. I just wanted to come back a bit to Optimism, and I think all of you guys are DeFi protocols, right? And it seems like most of what's going on Optimism is DeFi, but obviously every layer two out there or every chain out there is wants the full set, right? They want the DeFi guys, they want the FT guys, they want even like the social guys, right? The friend tech people who may be going around farming every sort of fork out there at the moment. I think just opening this up to all of you. I mean, from your perspective, what are kind of the users that are Optimism now? Did it sort of change after the airdrop, right? Last year, and what do you think are some of the gaps, right? That other projects should come in and fill on Optimism itself. Maybe start with Alex.
Yeah, I mean, I think it's changed a lot. I think I don't know how well known it is, right? That WorldCoin, moved to Optimism, for instance, or Farcaster, I believe, is in the process of moving to Optimism, and uh, regardless of what you think of maybe those two projects, there's no doubt that they are building very different types of use cases on crypto tech, and that they have chosen the OP stack and that for the time being, Optimism mainnet as their home. And I think that kind of signal is super compelling. Likewise, when you see Coinbase choosing to build on OP stack and contribute to the Superchain, I think that's super compelling. New use cases like friend tech, built on the OP stack on Base is super compelling. And so, I mean, really, I think, my perspective is we need more of everything, right? Because if we're in sort of the bear market moment, there aren't a ton of users. We like to joke, there's 10 people in DeFi, and we're all talking to each other on crypto Twitter, and we're all trading against each other, and we're all farming the same things. And it does sometimes feel like that, but it will feel like that until it doesn't. And the things that people will flock to, when the market really gets roaring again, will be the things that have been built in this time, right? And I do think Optimism's done an incredible job, in attracting a variety of builders, building across a variety of use cases to Optimism. Of course, that's so much of our job as well, right? Is to help attract those builders to both Base and Optimism, help them on board. But yeah, while it can feel a bit like where's all the activity now, we're really just building the products that people will use when it really comes roaring. And I do think like two things I've been thinking a lot about lately is when you talk to like large capital providers, like, so why does all this trading activity, why is all this capital still on layer one Ethereum? Right. And it's a crazy amount relative to what is on layer twos. And layer one is slow. Layer one is expensive. Like it's not a great experience. So what's holding them back? And when you talk to them and hear what's holding them back, it is primarily security, right? They know that they could move billions of dollars to Optimism tomorrow. And moving those billions of dollars, they'd likely be able to create better rewards at lower costs and for a better experience. That billions of dollars would migrate with it a ton of users, right? Because users will like trade or use the products where the liquidity is deepest. But the thing that holds them back is basically security. And so that is why Optimism, after Bedrock launched, said that their primary objective, and the Base team is totally aligned with them here, is security, right? Is getting fault proofs launched so that major capital providers, users who care a ton about security, will feel more confident in moving that activity to layer two. And so I expect, this is currently already in beta testing. I would expect when this launches across OP stack chains, it will remove one of the biggest barriers to migration to layer 2 Ethereum. And when you combine that with EIP 4844, which is going to drop L2 costs by several orders of magnitude, I think we are looking at the moment that most of us were thinking about when we first started deploying to layer 2. I mean, the synthetics team was obviously thinking about this before anybody, right? And I think we developed a similar type of thesis, right? That this was going to be the thing. And so I think that is what we're really excited about. Just imagine, even in the bear market, even if things don't come roaring back, major capital moving onto layer 2 Ethereum in ways that we haven't seen before. And all of that volume, all of that activity that's happening on layer 1 Ethereum and still on some of these alt layer 1s moving to layer 2, I think that's where it gets really exciting. And this is stuff that we expect early next year, right? So this isn't really far out. This is probably pretty close.
Matt, from synthetics perspective?
Yeah, I would echo a lot of what Alex said. I think the biggest thing that Optimism and L2s as a whole are missing is just a lot more developers, a lot more users, and a lot more capital. And because I mean, right now, if you were to go on like DeFi Llama and look at like the TVL chart for Optimism or Arbitrum or Ethereum, you can go anywhere. Like, obviously, this is a bear market, even if we've, seen a little bit of a recent jump in asset prices. And the biggest thing that'll help us get out of this is new and exciting ways to use the on-chain environment. Now, things like, SocialFi may help to bring people in. I think there's a little bit of experimentation around, the usage of a bonding curve and seeing how happy people are to be excited to be speculating on things like that. But I think, like, to me and to the synthetics community, the biggest catalyst that I see in like the immediate future is Coinbase and Base helping to onboard the next generation of developers and users and so on, right? Because there aren't many centralized exchanges standing, and there aren't like it's a crazy idea to think about a centralized exchange creating a chain, right? Creating this chain within the Optimism stack, this decentralized environment, and helping to onboard people there. And they seem to really want to walk the walk with that. And that does take away like a pretty large revenue source for Coinbase, right? Like immediately, like if you immediately move people on chain, people may not use your centralized exchange at first. But the narrative there is get the on-chain space to grow by orders of magnitude, right? Like we're still in an extremely small pond right now, right? Like if you are to look at this overall perp space, like this overall DeFi space, it's small. We say it all the time in the perps landscape. Like I was just on a call with some of the GMX guys, and at the end of the day, like we're tit for tatting on Twitter over the smallest amount of volume, the smallest amount in fees, and the smallest amount of users, right? Like if we grow this space by 10 times, 100 times, 1,000 times, now we're talking of a real place where we can start trying to draw some battle lines. But as of right now, we just need to get as many users and as many developers on chain as possible and kickstart this on chain world. And I think there's a lot of places where we can get a lot better with this as time goes on. And I think there's a lot of protocols that are helping to abstract away a lot of the complexities that are on chain. And I think that's going to be a real big win. Like I think Coinbase will do leaps and bounds with onboarding people and building this on-chain experience into their centralized app to kind of handhold people into the space. And then there's protocols that handle account abstraction and who handle things where they're abstracting away things like bridging, they're abstracting away maybe some swaps in the background. They may put you like you may be on Optimism or be on Base and you may not fully know that, and like that's okay for some of these intro users that are just starting to use the on-chain world. So I think there's a lot of good that's coming, and just want to shout out again that I echo a lot of what Alex said 110%. We need more developers, we need more users, we need more capital. And there's a lot of ways that we'll get there. And I think if we do all that, like if we get the developers here and they're building protocols, during the next bull market or during this next period of rapid excitement around being on chain, I think we can keep those users on chain, because we've struggled with that. We really struggled with it. We can only keep them on during bull markets and during a little bit of volatility. But if we build it, they'll come, right? So that's really what I'm excited for.
Atakan, coming to you, do you think that there's still gaps to be filled in the Optimism ecosystem?
Yeah, I also echo with both Alexander and Matt. Like they said a lot of things that I was gonna say. Just one thing to add to Matt is like Binance did it at the time, like 3 years ago. The same thing Coinbase did, but a lot of people was seeing that as a battle with decentralization at the time. What Base did better is like they partnered with the probably best layer 2 there, like with OP stack, and they market it as it is, and they also get the support of both on-chain guys just to grow user base. Like Matt and Alex talked about a lot of future things, but maybe I can give some of my thinking's perspective for current situation. Like I think Optimism's community right now is optimistic and, is pun intended, friendly, knowledgeable about DeFi in general, like people who embraces Ethereum values but don't like Ethereum fees. So in short, everything that Ethereum offers without the cost of it. And I would say that what's currently lacking in Optimism is probably NFT markets, NFTs. Like we had a dream of, for example, also real world usage. Like we had a dream of, for example, collateralizing a house on chain and borrowing OP with it, but with USDR failure, we are not sure if that's the right way, at least right now. In my opinion, like we still need, of course, a lot of new developers, but DeFi currently at current state has full seat right now on Optimism. Like maybe more native protocols could be built in, but like it's also hard to compete with giants of DeFi. For example, if you want to compete with Synthetics as perps, you can't do that right now. Like it's very hard, or like we are still experiencing it, but with Aave, like though there's not much like NFT action is happening on Optimism, like other than FNFTs like Mivelo. Maybe a good NFT project can bring in a lot of new people to the ecosystem. But I personally don't know anything about NFTs or how those projects grew. Like my shorter answer would be, sir, like if I knew what's lacking, I would start filling that gap immediately. Like, yeah. We thought of some ideas in the past, like FNFT marketplace, simply just for the Vivelo, but we're still developing it. And like if I knew that, I would start it.
Maybe it's a new project for the Zona team. But yeah, I mean we've seen NFTs struggle, typically outside of Ethereum. Even there are some bright spots out there, but they sort of have been struggling. And last quarter was really quite brutal. We've talked a lot about Base. Yeah, I think it's unavoidable. I think this is one of the most exciting things to happen to Optimism, and really gave them a boost. The whole stack a boost, but also, I mean, it's now outperforming Optimism itself. I think from a transactions perspective. So I think it must have been last month now that we saw that there was a deal, right? So between Base and Optimism, where Base will essentially start buying Optimism tokens and contribute to development. I think question for you guys who probably closer to this than all of us is like, do you think this is a one-off, or do you think like the whole OP stack and sort of Superchain sort of narrative, is this something that the foundation will continue to do? Because and is that the right way, I guess, or is that the right model going forward for Optimism and also for other L2s to sort of attract people to come and build on it, right? And also contribute back to the core technology and the core infrastructure. Yeah. Maybe Matt. Yeah, Alex,
Oh,
you can go
sorry,
first.
I
Go
was
ahead.
just going to jump
Yeah,
in.
no, go
Yeah,
ahead.
I mean, I think part of the Superchain vision, right, is that if you are participating in the Superchain, you will be delivering a portion of sequencer revenue back to Optimism and back to the retroactive public goods fund, right? And this is where, you know, the idea that we talked about in the very beginning, which was this infinite sort of self creating grant program that could run in perpetuity gets really compelling, right? Because we're talking about whether or not, you know, you're like a game developer who has spun up a Superchain chain, right, just to focus on supporting a game app, or whether you're a generalized blockchain, you know, like Base, or whether you're WorldCoin or Farcaster or whatever, that your chain overall will be contributing back to the collective, to OP public goods funding, and then that funding will be allocated back out to the people building the best products, the best public goods in those spaces. And so I do expect, you know, that we'll see for the multitude of people who are going to be building on OP Stack, who are going to see the value in tapping into the interoperability of the Superchain, that there will be a ton of different types of chains with a ton of different types of products, and all of that will be sort of sending that value back, which will of course go to fuel the overall flywheel here. You know, whether or not there's ever another kind of like allocation of OP, you know, funds, I would say I think that's a bit less likely. I think clearly Optimism and Coinbase wanted this to be a very, very close relationship, basically partners, right, in building the super chain, which is absolutely incredible. And so I think that's why they made such a unique deal here, and why they are basically now, both contributing to the underlying tech, which is super compelling. But yeah, what I'm most excited about is this idea of developers are all going to have the ability to spin up their chains, and all of them will be sort of contributing back to the public good.
Matt and Atakan, anything to add to this? Yeah.
Yeah, I think Alex has covered a lot of what I wanted to jump in and say. I think that probably one thing of note is that when it comes to Optimism, like onboarding someone like Coinbase, right? Like that's a sizable organization to get into, you know, helping to build the Optimism stack, continue to improve it, continue to improve the security, and onboard users, you know, to it, right? So like some of those numbers that were, you know, decided on, you know, in terms of OP amounts and vesting periods and everything else, right? Like those are kind of eye-popping numbers to a degree, but we kind of have to like continue to reset ourselves in the fact that like this is Coinbase, right? Like this is a massive organization that is stepping into the ring, right? That is now helping to be beneficial to the entire Optimism collective, right? And as they continue to improve and they continue to grow and onboard users, developers, and just build out an ecosystem, we get what Alex just said, right? We get this ongoing grants program, you know, whether it's grants for developers or whether it's, you know, retro public goods, that both have done amazing things for the ecosystem. And if we can continue that into perpetuity, you know, with sequencer revenues, I think things look a lot better for grants programs going forward, right? Because what Alex and, you know, what Attican said, you know, earlier on in this call is that a lot of this like alt L1 narrative died when incentives died, right? So if we can find a way to make this, you know, these grants and these like initial bootstrapping of protocols as sustainable as possible, then we'll be in a much better spot. And that's what the super chain is aiming for, with this like share of, you know, sequencer revenues and things along those lines. And I think like that's amazing. Like that's really what we need to push towards. So yeah, I mean, who knows if there will be others that build and receive allocations? Like I know the same amount as anyone else on that realm of things. But as said before, like there's synthetics ecosystem projects, and there's also conversations around synthetics, releasing Optimism app chain as well. So it's a very compelling vision for all of us. It's a very compelling vision for developers. If you told a developer that he could have his own test bed to build his protocol or her protocol, I think their eyes would light up with joy. So, like that's going to be a super amazing narrative, and we're really excited to explore it.
Adogan, anything to add to that?
Yeah, basically Matt and Alex said everything, so I don't have much to add.
Okay. I think we're almost up at the hour, and it's time to wrap up. I just wanted to go around the table. Any closing thoughts, remarks? What it's been a good week for crypto. So what any thoughts about what's gonna come next in Q4 and maybe in 2024? Yeah, from you guys. Yeah, I can go first. Yeah,
Like for us or for in crypto in general?
both.
Like for us, we recently have partnered up with Chainlink, and I don't know if it releases on Q4, but we are aiming for using CCIP of Chainlink, and for example, you will be able to do things like supply OP on Optimism and borrow USDC on Base, or vice versa. And we think that it is a great leap forward for lending protocols, especially for Superchain region, because like we think that in the future there will be a lot of chains that connected to the Superchain, and like will make users able to go there without actually going there, just like use collaterals on Optimism and just be in other places. So like it's something like both upgraded bridge and upgraded landing protocol. And for crypto, like halving is coming, and generally crypto is a cyclic, like is that a word? Cyclic thing. Like every 4 years there's a bull market, then it dies slowly, and we think that like we are coming into that, and we are hopeful that like we survived in the bear market, we release in the absolute shit state of crypto, like with FTX shit show was happening, Zone launched, and like we developed for these good times, and hopefully people will also see our work. So yeah, we are very, very, very optimistic about the near future.
Thanks for that. Matt?
Yeah. So I'll start with the synthetics, next couple of months to kind of like tie out the year, right? Like there's been a lot of talk on this. There's been a lot of governance conversations on the synthetics Discord about it. And really what we'll see by the end of the year is going to be synthetics v3 launching on Base. That really is like a real main goal from the governance side, and then pushed over to the developer side. And with that, that'll enable synthetics v3, that'll enable perps, and then you'll start to see additional markets build on top of that synthetics v3 tech. We're like that in and of itself is going to be like a period of experimentation for synthetics and seeing what works, what doesn't. And from what is gathered from there, you'll see synthetics expand further, right? Like there's conversations of synthetics going further on the Superchain. There's conversations of taking those deployments, then going back to Optimism with them, going to Arbitrum, going elsewhere, right? Like that's obviously a thing that the community has talked about. But I would say in the immediate future, the big convo is Optimism and the Superchain, and how synthetics can continue to expand over there. And really as time goes on, it'll be onboarding as many developers into the Synthetics V3 ecosystem and bootstrapping them with liquidity and infrastructure and seeing the amazing tools that they can build, right? Like we have a great ecosystem as of right now with perpetual futures, with options, with structured products, with, things like atomic swaps, going through Curve and 1inch. And like there's so much, but there's so much more in the derivatives landscape that isn't on chain yet, and we're hoping to bring on chain. When it comes to my thoughts on like the wider crypto ecosystem and such, I know Attican said that this is a bit of a cyclical market. If Attican, if you ever find the crystal ball of when the bulls are going to happen and the bear market's going to happen, you let me know. Okay, like just loop me into that one because I need that one. All right, so
Sir,
but
I have a reminder from 2021 to buy on like January 2024. So like I will buy some on January.
yeah, you make sure to share that reminder with me. If you should.
Okay.
So anyway, my wider thoughts on the ecosystem is that like I think that people are really noticing that centralized exchanges are not the place to be, right? And I like that is the kind way to say it. The rude way to say it is if you put your money on centralized exchanges, money could be gone. Like, we're seeing that. We're seeing that with FTX. We're seeing that with BlockFi. We're seeing that with Celsius. There is a like laundry list of places you can look to and say, wow, but like we've deleted capital, right, from the centralized landscape, and people really have to just start saying, no, like I am not going to use centralized exchanges. And as the DeFi side, we have to say, hey, we're going to improve the experience so much that people want to be on chain more than they want the convenience of being off chain. And that's where I think the next narrative starts to build, right? And that's account abstraction. That's, like multi-signature wallets built into things directly, right? Like Argent wallet, but across the entire landscape. That's low fees on L2s. That's a wide array of protocols to choose from and things to do on chain. Like there's so much that we can do there. And that's like, to me, that's the next narrative, like making the on-chain space as amazing and as great as it can possibly be. And just really taking the convenience side and making it as convenient as centralized exchanges were. And protocols are doing so much there, right? Like if a user doesn't want to set up their own wallet and they just want to use some sort of like email login service, like a friend tech or something like that, right? Like we've seen a bunch of protocols do that. Let them do that. Like we need to slowly just onboard people on chain, and then from there they can, become a little bit more accustomed to using this on-chain world. But to me, to summarize that all up, that's the next narrative. Getting as many people on chain as possible, making it as convenient as possible, and making them stay on chain. We don't want them just to be here for a bull market. We want them to be here for the long term.
Yeah. And I would say like lots of work being done by the wallets as well, right? To try to make it as easy as possible to come on chain.
Can I cut in before Alex, sir?
Yeah.
Just to add one thing. I said that I live in Turkey, and like it's I don't know how you feel about inflation in general, but in here like 30% is normal, and generally we are having like 200% of inflation, things like that. And it's even worse in third world country. And what Matt said is like very important. Like people need to how can I say, like for example, people in Afghanistan don't choose to be on chain or off chain. Like they need to be on chain. Like there's no banking things. There's no way to save their money and like against inflation. They cannot go away from the country if there's a war, because like their all money is in government hands, or like they're hiding it in their houses. Like it's better in Turkey, but compared to Europe or US, it's very worse. And we need that. And I think if it's if it's easier for people to come on chain, like my dream is something like they will be on chain, but they won't know they're on chain. And similar to Matt said, if it can be done, it's like it's no brainer for a lot of people, like 2 million, 3 million. Like there are a lot of people in Pakistan or India that wants to save their money or wants to fly away to other countries with their savings. Of course, it will be a game changer in my opinion.
Yeah, and Alex, last but not least.
Yeah, I mean, I echo all of the above, but for Velodrome and Aerodrome specifically, we've got Relay launching in the next week or two. Relay is similar to Vodium on Convex, right, where you can sort of automate the process of voting for pools, compounding those rewards into more VE Velo. Folks like the very busy Treasury Council on synthetics, I think, will enjoy this quite a bit, as it will remove, a bunch of steps from their sort of weekly participation in the Velodrome, Aerodrome flywheels. So that's super exciting. Then the other big thing is Slipstream, which is our own sort of novel implementation of UniV3 style concentrated liquidity. And that basically means we have sort of complete TVL dominance on Optimism and on Base. This will allow us to also have volume dominance on these chains and give basically LP providers another great way to sort of participate in the protocol and generate more fees for the overall flywheel for lockers, that sort of thing.
All right, and that's all the time that we have today. It's been great chatting to you guys, Matt, Alex, Atakan. Thank you so much for joining us today. And I think safe to say we are all very optimistic about Optimism, which is very much in line with the theme of our meetup. Thank you so much to the audience for joining us and staying with us up to this time. We hope you take care and hope to see you during our next meetup. So thank you guys. Thanks so much.
Goodbye.